All right, so today we're diving deep into something pretty interesting. Companies Act amendments, the ones from late last year.
Hmm.
It's all about peeling back the layers of corporate ownership.
Yeah.
It's like, who really owns these companies? It's like a corporate game of Clue.
Yeah.
And, it's like trying to figure out who really benefits from all the company's success.
That's a great way to put it. It really is about bringing more transparency to the corporate world.
Mm.
And a big part of that is this whole concept of beneficial ownership that's been taking center stage.
Yeah, and our source even called them corporate ninjas, like hiding in plain sight.
Uh-huh. Yeah.
So, can you break it down for us? What exactly this beneficial ownership thing, and why is it such a big deal all of a sudden?
Well, imagine a company, right? And the records, the official ones, they show ownership spread out, across all these different shell companies or like investment vehicles.
Yeah.
Beneficial ownership, it digs deeper. It's like, okay, but who's really in control of all these entities? Like, who's actually getting the rewards?
Yeah. Okay, so it's like lifting the corporate veil.
Exactly.
But why is this so important now?
Well, if you think back to that Satyam computer scandal,
Oh, yeah?
back in 2009, that really shook the Indian financial world. Massive accounting fraud. And it really highlighted how dangerous these opaque ownership structures can be.
Right.
So these amendments, they're trying to prevent that kind of thing from happening again, making it way harder to hide those illicit activities behind a web of shell companies.
It makes sense. And it seems like India's not alone in this push for more transparency.
Not at all.
The source mentions something called the FATF. What's that all about?
Ah, yes. The FATF, that stands for the Financial Action Task Force. It's this intergovernmental organization that sets these global standards for combating, things like money laundering and terrorist financing.
Right.
So these amendments, they bring India more in line with what the FATF recommends, signaling that they're really committed to having a cleaner, more transparent financial system.
So it's not just about internal reforms, it's also about aligning with what's happening globally.
Exactly.
Interesting. Now, let's shift gears a bit. Remember those old stock certificates, like the ones our grandparents might have had tucked away?
Oh, yeah.
Well, get this. Those are getting a digital makeover.
They are. We're talking about phasing out share warrants. Those were basically paper promises from a company to issue shares at a certain price in the future.
Yeah, the source called them like promissory notes for company shares.
It's a very good analogy.
Yeah.
But the problem with these paper warrants, is that they're really hard to track.
Oh, I bet.
Susceptible to fraud, can get lost easily, and they're just not practical in this digital age.
Yeah, that makes sense.
Okay.
So what happens to all those old warrants? Did they just vanish?
Not quite. Under these new amendments, companies have a couple of options. They can either buy those warrants back or convert them to shares or transfer them over to the Investor Education and Protection Fund. It's called the IEPF.
The IEPF, what's that?
So it's a government fund, and its whole purpose is to protect investors. In this case, it's holding on to all those forgotten or unclaimed share warrants.
Wait, so there's a government fund out there holding on to potentially valuable assets.
Exactly. And they try to reunite those assets with their rightful owners.
Right.
But if they can't find them, those funds get used for investor education and awareness programs.
That's actually pretty cool. So this whole dematerialization thing, it's not just about modernizing, it's also about protecting investors.
Absolutely.
But what does this shift to digital actually look like, for companies and for investors?
For companies, it means moving away from those cumbersome paper-based systems or going digital. Electronic records. Imagine the challenge, especially for older companies with decades of paper trails.
I can only imagine.
For investors, though, it means their holdings are tracked more securely and transparently, which reduces the risk of fraud and loss. It's a win-win. Better security and more efficient.
Okay, so we've got transparency and ownership, and we've got to move toward these digital records. It seems like these amendments are really shaking things up. But what does it all mean in the grand scheme of things? Why should our listener care about these, seemingly technical changes?
Well, that's where it gets really interesting. You see, these amendments aren't just about catching the bad guys or updating outdated practices. It's about aligning India's entire corporate governance framework with global best practices.
So it's like leveling the playing field, boosting India's image on the international stage.
Exactly. When investors, domestic and foreign, see a country with a robust and transparent corporate governance system, they feel more confident doing business there. And that's absolutely crucial for economic growth, job creation, overall development, you name it.
It's like building a solid foundation for a skyscraper. Without it, everything else is at risk.
A perfect analogy.
But we've only scratched the surface here. There's still so much more to uncover about these amendments and how they're going to shape the future of business in India.
Absolutely, there's a lot more to discuss. Welcome back to our deep dive into India's Companies Act amendments. We've been talking about this shift towards more transparency and digital records,
Yeah.
but now I think it's time to dig a little deeper into how these changes are actually impacting businesses, on the ground.
Yeah, I'm curious about that too. It sounds like companies have a lot to adapt to with all these new regulations.
Oh, absolutely. And the impact really depends on the specific amendment we're talking about.
Okay.
Take the concept of beneficial ownership, for example.
Right, those corporate ninjas we talked about.
Exactly. Now think about who these beneficial owners actually are. It's not always just one person who owns the company outright.
Right.
It can get pretty complex.
So you're saying there could be multiple layers of ownership involved.
Exactly. It could be a whole web of trusts, foundations, even foreign entities,
Yeah.
all leading back to that one ultimate beneficiary.
Mm.
And this creates a real challenge for companies because now they have to untangle these ownership structures to comply with the new reporting requirements.
Yeah, that sounds like a massive undertaking, especially for those larger companies with global operations.
It definitely can be. These amendments are demanding a much higher level of due diligence from companies. They can't just take someone's word for it anymore. They need to verify identities, trace ownership trails across borders, and make sure they're not mixed up with any shady entities.
So it's not just about paperwork, it's about having really strong systems in place to actually identify and assess risk.
Exactly. And that's where technology comes in. Things like compliance software, digital identity verification, even blockchain-based solutions for tracking ownership are becoming so essential for companies to navigate this new landscape.
It sounds like these amendments are really pushing companies to modernize their compliance practices.
They are.
But aside from just avoiding those penalties, are there any benefits for businesses who embrace these changes?
Absolutely. For one, it levels the playing field. When every company is held to the same high standard of transparency, it reduces those opportunities for unfair competition, and it creates a more ethical business environment.
So no more hiding behind shell companies or cutting corners on compliance?
Exactly. And this, in turn, can boost investor confidence. When investors, both domestic and foreign, see that India is serious about cracking down on corruption and promoting a fair and transparent market, they're more likely to put their money into Indian businesses.
So it's not just about risk mitigation, it's about creating a more attractive and trustworthy business environment.
Precisely. And this actually ties into India's broader economic strategy.
Oh, how so?
Well, the country's been working really hard to improve its ease of doing business ranking, and these amendments are a big step in that direction.
Right, I've read about that. A higher ranking means attracting more foreign investment and boosting economic growth.
Exactly. A transparent and predictable regulatory environment is key for attracting that foreign investment. By strengthening its corporate governance framework, India is sending a clear signal. We're open for business. We're committed to creating a stable and reliable marketplace.
It sounds like a win-win situation,
Yeah.
promoting ethical business practices while also attracting investment and driving economic growth.
That's the ideal outcome, yes. But we also need to acknowledge the potential challenges. Adapting to any new regulation comes with a learning curve, and these amendments are no exception.
So what kind of challenges are we talking about?
Well, for some businesses, particularly smaller ones with limited resources, the increased compliance burden might feel really overwhelming.
Right.
Imagine having to overhaul your entire record-keeping system,
Yeah.
invest in new technologies, maybe even hire additional staff to handle the increased workload. It's a lot.
It's like asking a small startup to compete with a multinational corporation on compliance infrastructure.
That's a great analogy. And then there's the potential for unintended consequences. While the goal is to create a more transparent system, there's always a risk that overregulation could stifle innovation or discourage entrepreneurship.
Right. So finding that balance between strong regulation and a business-friendly environment is crucial.
It is. And that's why open dialogue between regulators and the business community is so important. Regulators need to understand the practical challenges faced by businesses, especially smaller ones, and be willing to adapt and refine regulations to make sure they're achieving their intended goals without stifling growth.
So it's not just about setting rules, it's about creating a system that works for everyone.
Exactly.
But we focused a lot on the practical aspects of these amendments. Let's zoom out a bit and talk about the human element.
Okay.
After all, it's people who make decisions, not just systems.
That's such a crucial point. We can have the most sophisticated compliance software in the world, but it's meaningless without a culture of ethical decision-making within organizations.
Right. It's like having all the latest security gadgets in your home, but leaving the door unlocked.
Exactly. These amendments are a reminder that compliance isn't just about ticking boxes or following procedures. It's about fostering a mindset of integrity and accountability at all levels of an organization.
So it's about creating a culture where doing the right thing isn't just expected, it's ingrained in the company's DNA.
Precisely. And that requires leadership from the top, clear communication of ethical values, and empowering employees to speak up when they see something wrong.
It's about shifting from a culture of compliance to a culture of doing the right thing.
Exactly. And that's a message that resonates far beyond the corporate world. It's about building a society where ethical behavior is the norm, not the exception.
It sounds like these companies' Act amendments are part of a much larger conversation about responsible business practices and their role in shaping a more just and sustainable future.
That's a great way to put it. And it's an exciting time to be a part of this conversation, as India is taking a leading role in shaping the future of corporate governance in a globalized world.
What's the end goal here with all these efforts to reform corporate governance in India?
I think it comes down to creating a more just and equitable society.
Okay.
When businesses operate ethically and transparently, everyone benefits. It creates a level playing field where innovation thrives and economic growth is shared more broadly.
So it's not just about corporate profits, it's about building a society where economic prosperity is in line with ethical values and social responsibility.
Precisely. And that's what makes these companies' Act amendments so significant. It's a step toward a more sustainable, more responsible form of capitalism.
But one that benefits everyone.
Exactly. It puts the well-being of all stakeholders front and center, not just the shareholders.
Well said. And with that, we come to the end of our deep dive into India's Companies Act amendments. We've explored the technical details, the potential impact, even the bigger picture ideas behind these changes. It's been a fascinating conversation. And I hope our listeners have a better understanding of how Indian business is evolving.
I hope so too.
Yeah.
As always, the key is to stay informed and stay engaged. These changes affect us all, whether we're investors, employees, consumers, or just citizens who care about building a better world. And thank you to you, our listeners, for taking the time to dive in with us.